SoFi stock investors have reason to cheer as the company grew its total member base to over 8.1 million. Now, I'll discuss what that could mean for SoFi stock investors and go into detail in that regard. Now, I understand SoFi's stock price hasn't performed as well as SoFi stock investors would hope, but more importantly, the underlying business prospects seem to be getting better quarter by quarter. So let's take a look at the details.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, SoFi is saying that in the first quarter of 2024, they grew their member base to 8.1 million. That was up 44% from the prior year, and they added 622,000 new members just in the last quarter. Just as important, they see members adopt more products and deepen the relationship with SoFi. So not only is SoFi adding more members, but these members are adopting more products. So that's great news for SoFi stock investors. Now, I understand SoFi stock investors have been under pressure lately because the stock price hasn't performed well. It's down to $7.50 per share, and it used to trade at high valuations near $24 per share. Since mid-2023, around July, the stock has been flat and moving downward. You can see that there as well. So despite the improving business performance, SoFi's stock price has not reflected those improvements in fundamentals. That's a bit strange to me, considering that SoFi's stock price reached those sky-high valuations in 2021 and 2022 before the company really made strong progress on profitability or demonstrated these types of improvements. But now that the company is actually demonstrating excellent growth in profitability, stock price has been flat. That's been a strange phenomenon to me, but the market behaves that way sometimes. The market can be strange, as you're probably observing as I'm recording this video. The meme stock frenzy is exploding again with GameStop and AMC, and those companies do not have strong profit prospects or any reasonable expectations of improved business performance. Nevertheless, the stock prices are soaring. So you can understand the market does not always behave rationally, and you have to try to stay focused on the business and the business performance. Speaking of the business performance, the company's plan is to sustainably and responsibly grow and improve their ability to deliver meaningful value to their shareholders. And one of their segments that they're focusing on is the financial services segment, which saw revenue increase by 151% in the first quarter, grow to 151 million, which was up 86% year over year. This segment is delivering strong growth, and one of the reasons is all of the various products that SoFi offers. They've got personal loans, banking, credit score, they've got the invest product, private student loans, credit card, insurance, mortgage loans, travel, and more. They've said they want to be everything to everyone in terms of financial services. They want to be offering you every important financial product you might need in your lifetime. And that's going to lead to increasing number of products that each customer engages with because they have it available. If you have it available, that makes it more convenient. Customers are likely to stay within your ecosystem and purchase more products from you instead of going shopping around for different products from different providers. Now, the impressive part of growing revenue in the financial services segment for SoFi was that even though revenue increased by 86%, they only increased their directly attributable expenses by 8%. That demonstrates economies in scale. Revenue is growing faster than costs, and that can explain why SoFi has made such good progress on profitability, and they have very robust forecasts for profitability over the next several years. Now, the financial services segment achieved 37 million in contribution profit at a 25% margin compared to a 24 million loss in the same quarter last year. If you're not aware what contribution profit is, it measures how much a segment contributes to the overall profit of the company. So you might think of a company that has these kind of overhead expenses, things like rent, advertising, taxes, corporate expenses, etc. And then you have product level margins, right? So those are total costs, right? Let's say the company has to pay 100 million every month in rent, and they got to pay that rent even if sales are zero. Even if sales are zero, you still got to pay rent. So contribution profit measures just at that product level. This product cost you $1 million to make, and you sell it for $2 million. The contribution profit of that product is $1 million. Even though the gross profit margin or the profit margin overall might be negative, because you've got to take that rent expense and you've got to allocate it to your different products. You've got to say, okay, I've got 100 million in rent and I've got all these products. I've got to split that rent among my business. And so the business level profit margins might be different than product level profit margins. But if your product level profit margins are adding a contribution profit at 25%, that's closing the gap to your fixed expenses like rent. And then once you surpass that 100 million in your rent payment, then everything after that really explodes profitability, because you've now covered your fixed costs, and then everything after that starts to turn into expanding profit margins. So contribution profit is an important metric to consider when you're evaluating companies that have large fixed expenses, like SoFi does, being a large company that it is. In its SoFi money account specifically, it increased 61% to 3.9 million SoFi money accounts, with year-over-year growth of over 90% of their consumer deposits are coming from direct deposit members. That's great news as well for SoFi stock investors. Direct deposit customers are the most valuable bank customers, because your direct deposit bank account, wherever you have your direct deposit going into, is likely to be your primary bank account. That's likely the bank that you engage with most often, because that's where your paycheck is going into. So that's where you're probably going to be paying your bills out of. That's where you're probably going to be using your debit card to spend, if you're spending on a debit card. If you want to add products, you're probably going to go with that bank where you have your direct deposit, because you're already going to be using that bank so often that if they have another product available for you, you'll probably stay within that ecosystem, because you know you're in that ecosystem anyway. You know you've got to open that app. You know you've got to check in, see if your paycheck went in there, see if it was right, make your bill pays, all of that. And so the direct deposit bank is the most valuable bank that a consumer might have, even though consumers sometimes have more than one bank account. The one where they have their direct deposit going into is the most valuable. And those are the customers that SoFi is going after. Their promotion, where they give you a very high APY rate for your money and the $300 sign-up bonus, all require that you set up direct deposit. So this is all great news. This growth in customers is likely to lead to better revenue and profitability down the line for SoFi, so long as they can engage these customers, keep them in the SoFi ecosystem, treat them well, give them good service, so they feel no reason to switch and go to another bank. Then SoFi can benefit from these customers for years and years and years, because switching bank accounts is a hassle. It takes time. And typically people don't switch bank accounts unless there's a big reason to do so. And SoFi, one of the reasons people are switching to SoFi is because of the attractive deposit bonus and the high interest rate on checking accounts and savings accounts. That's attracting people over from Bank of America and Chase and Wells Fargo that don't really have those types of deals for their consumer deposits. They don't give interest back on their savings, not very high interest anyways. And so this is a good reason, it's a compelling reason that's bringing people over to SoFi. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.